I'm glad to see all of your bright faces here today for our lunch panel. It's a very special lunch panel. And, you know, this gentleman I've known since I've actually come into the business. And actually, first things first, please refer to our disclaimer and forward-looking statement on the table over there. And I haven't known that since I came into the business, so I learned that along the way. But aside from that, I've known Brent Cook since, I think, 2011, when I saw him present, when I knew nothing about mining exploration, and he really had a much different, more very practical approach to this market. And ever since then, I've become a subscriber. I've interviewed him on my podcast. We've done countless interviews for our website, stocknewsnow.com. And I'm really honored that he took the time to come here and share with you some of his insights, his exploration insights, which is the name of his newsletter, with 3 companies that he discusses in that newsletter. So with that, I'd like to introduce Brent Cook from Exploration Insights.
All right, well, thank you all for coming. I appreciate it. A bit of background on me. I'm an economic geologist, been doing this since I graduated in 1978. I've worked in over 60 countries in the exploration side, all the way up to the feasibility study side of things, bank audits. Worked for Rick Rule as his mining analyst for about 6 years, and went independent and started writing my own newsletter. And now there's 2 of us, Joe Mazumdar and I, who write this letter. And it's basically about what we are doing with our money in the sector. The only money we make is subscriptions and our investments, and we just tell you what we're doing, what we're seeing, good, bad, and ugly. So what I want to, this is a bit of a different crowd, and what I want to get across in my brief presentation before we get into the panel discussion is why this sector is, the exploration and discovery sector is set to do really well regardless of metal prices. And that has to do with the discovery rate, what the miners have been spending looking for these things and such. So I've titled it, Miners Are Desperate for New Deposits, How MicroCap Explorers Will Supply the New Mines at a Premium. Let's see. All right, fact. We're not finding enough economics to fill the demand. What this slide here shows is gold discoveries since 1990 by year. The little light yellow bit are ones that are, you know, not quite drilled out yet, but expected to come online. You can see that discoveries have been going down significantly. Exploration expenditure has been going down, discoveries considerably more. What this little star here is that's annual production, which is about 90 million ounces a year. You can see the last time we found that much was in 2006, then over in here. So we're not finding enough deposits to replace production. And right now, that's about a 60 million ounce gap per year that's not being made up with discoveries. And looking at initial gold resources, and more recently from 2012 to 16, again, you can see the same pattern. That's the total gold in announced discoveries, drilled out resources. That's 65. Down here, we're down to probably 12 million ounces in the last year. So we are not keeping up. Oops. To put this into perspective, visually, this is one of the largest mines on the Carlin Trend in Nevada. The Carlin Trend has been producing since about 1986 is when the big discoveries started happening. There are maybe a dozen gold deposits along that trend. Since the discovery till now, they've produced a total of 85 million ounces. So what I'm saying is we've got to find one of those every year to keep up with production. And it's not getting easier. I've got a timeline to discovery. With larger deposits now, it's taking 10 to 20 years from discovery till they go in production. So even if we find something today, we're not going to fill this gap. And this is what Newmont and Barrick, the 2 larger mining companies in the U.S., what their production profile looks like. And again, you can see the same thing. Here we are today. Their reserves and resources are dying off dramatically. Replacement weight for resources. Again, this is projected production or projected demand. These are the discovery chart I showed you earlier. And this is sort of someone's guess as to what it's going to look like going forward. I think that's really optimistic. But again, same thing. We're not finding enough to replace what we're mining. Ditto for copper. This is the Bingham copper mine just outside of Utah. We are producing on a global basis about 19 million tons of copper a year. That's what Bingham has. So we've got to find one Bingham and put it in production every year to stay even. And this shows what supply is and demand. So there's this deficit here that's got to be met. That's the opportunity, and it's regardless of metal price. And same thing, new copper mines are in decline. These are ones that have been put into production or are projected to go into production, and it's dropping off as well. Zinc, ditto. Same story. We've depleted some of the largest zinc deposits in Australia. We haven't replaced them. You can see the projected demand, projected discovery rate. And this goes across almost all commodities. This shows all discoveries up until about 2016 of those various metals. And you can see it's down again. So what are the majors doing? The major mining companies, because metal prices are low and their costs have been increasing, they've been cutting back where they can. Most of that cutback comes in exploration, which doesn't generate any immediate revenue. Most of these companies are run by accountants and lawyers. So exploration has been dropping off, yet they're starting to see that their production profile going forward is not going to keep up with it. So last year, direct investments by majors into junior explorers was in the order of $290 million. And that was 50% of all money raised last year for these junior miners, explorers. And it's looking even stronger this year. So they're recognizing what's happening. They're recognizing that they don't have the people on the ground in the various countries that these deposits are being found to actually efficiently explore. So they're putting money into junior mining companies either by way of placements, joint ventures, and letting the junior companies do much of the exploration. And that has a big advantage of that. They can do it cheaper. They're on the ground. They're more nimble. They've already set up their infrastructure. They know the politics. They know the minister of mines, that sort of thing. So it makes a lot of sense. And I listed here a couple of the companies that are doing joint ventures and strategic alliances. Two of them are here, Evrim and Lara. Okay. So what does a discovery look like, a real discovery? This is a company called Reservoir Minerals. It's actually, Miles Thompson here was the president of it and responsible with his team for the discovery of a significant copper gold deposit in Serbia. In June of 12 was the first discovery hole into this thing. And you can see the pop in the share chart right here. Market recognized this could be a discovery. I should point out we, in the letter, owned it down here. I worked with Miles in Brazil, so I know the guy. He talked me into it, fortunately. Okay, and here's the drill out phase. So they continue to prove that this is an actual resource that could be economic. In the end here, there were two competing companies for this deposit, and it was sold for about $500 million, a little over $500 million. It's now going through the final feasibility stage, and it'll be in production in probably 4 years, more or less. Anyway, that's what a discovery looks like. This is the opportunity, and I think even though the odds are tough to find these things, if you're successful, it's well worth the effort to understand this and invest in these. All right, Evrim Resources. Paddy right here, president of Evrim. This is another one we've owned since, well, personally since 10 cents in the newsletter. We bought it again at 40, but what's happened is in January of this year, they announced some success at a silver deposit that a partner of theirs is drilling out. They've got a 2% royalty and other attachments to that. That was positive. Number two, here in April, they did a trench on a new project in Mexico, in Jalisco, just a surface trench across an anomaly that they'd discovered, and it ran 193 meters at about 2 grams, which is, it's an economic, those are economic grades, very economic grades because they're oxidized, et cetera, et cetera. It's a good one. And then the second trench, cut perpendicular to it, was 106 meters of 13 grams with a high-grade core to it. Take out the high grade, and it's another 2 grams. So they've got an anomaly sitting on a hillside in Mexico. It's never been drilled, never been tested. The metallurgy, geology, et cetera, we don't know it in detail, but so far it looks quite positive, and it's yet to be drilled. But again, this is what these things look like. If they're successful, this has a long way to go. The market cap right now is in the order of 100 million. Barrick paid how much for Purina? Like $1 billion for Purina. Similar deposit. Anyway, these things are worth quite a bit to the majors, given the economics, if it turns out right. And finally, I'll throw up Fireweed Zinc, which is Brandon here. They acquired a zinc project in the Yukon, very favorable environment there in terms of infrastructure, not infrastructure, but politics, getting it permitted, that sort of thing. A lot of the major mining companies going to more safe jurisdictions now. Acquisition, drilling, resource definition. Now they're into the preliminary studies and expanding the resource. That's where that one sits, and that's a 220% gain over 11 months. And finally, I want to address this slide. Most of you have probably done fairly well. You know, we're not talking in crypto, blockchain, weed, that sort of thing. That's done really well. S&P's done well, et cetera. But this shows the cyclicity of the commodities sector, the metal sector. And you can see that right now we are sitting in the S&P versus the commodity index about as low as it gets. So in my view, this is probably the time to start looking at these things, looking at this sector, if you're into buying low and selling high. All right. So what I want to do now is open up. I've got some questions here. We'll go through with these fine gentlemen here. Again, my newsletter is up top there. That's how you find it. I'm not out there with a booth and that, but go there. You're welcome to it. And those are the other companies. I was here at this show last year, and a lot of the comment I got from the attendees was that they dabbled in the venture mining exchange and had pretty bad experiences. And I can understand that. There's a lot of shady or misrepresentation going on in that sector, but there are a lot of solid people there as well, and there's a lot of value really created with discovery of new mines. So I've invited these 3 companies who I own in the newsletter and personally and have for a while, because I think they represent the better side of the venture exchange up there. So I want you to get to know them. I'll start off with Paddy. If you wouldn't mind just giving us, kind of your background, how you got here, that sort of thing.
Yeah, thanks, Brent. Hey, everyone. My name is Paddy Nicol, President and CEO of Evrim. So my history in the industry goes back about 25 years now. So yes. How about if I sit for it? There we go. Is that better? Cool, thanks. I've been in the business for about 25 years now. I'm not a geologist, so unlike my fellow panelists here, they are geologists. So I've taken a different approach throughout the industry. I've worked with junior companies exclusively over that time, both with single asset focus, mostly in British Columbia, up in Alaska as well, but in 2011 got started into the prospect generator side of the business. And at least from my perspective, I think it's one of the better business models to pursue in terms of working with good exploration partners, minimizing your dilution, and having some longevity to mining companies. But as Brent points out, there's lots of things to watch out for in terms of management and projects and whatnot. With these guys here, it's you've got to sort of look into the business and see what type of people are running these things, and so.
Brandon, what's your background experience?
So I was actually born in the Yukon Territory of Canada. My father and mother run a expediting and mining exploration supply company in a small town on the Yukon. So I was kind of born into the industry. By the time I was 16, I was staking claims and doing soil samples. Did a degree in geology and went on to work in BC, Alaska, Yukon, Arizona, Nevada, Mexico, Colombia, Peru, Nigeria, and places like this. And eventually ended up in England and did a MBA and joined an investment bank in London there. Didn't find myself particularly in tune with the spirit of investment banking. I don't know if that's the right way to describe it, but which when you discuss perhaps the sharks that are in the junior mining world, it seems perhaps a bit incongruent to be annoyed with that level of or the lack of ethics in banking and going back into junior mining. But nonetheless, that's what I did. So that was 2009, and I've been plying my trade there recently. So we just launched this new company last year. It was Fireweed Zinc, so it was a good opportunity for me to be working back in Yukon, the land of my birth.
Excellent. And Miles, I'll give a little story on Miles first off. Back in, 90-something, CVRD, the large state mining company in Brazil, was going private. And I came down there with a group to value all their assets. And Miles was in country. He was our local geologist expert and such. So he organized the whole event, which fortunately occurred right around Carnival. And somehow he got me into the parade, so I really appreciate that. And anyway, you guys speak a little loud if you would.
Okay, yeah.
What's your background, Miles?
So I'm an exploration geologist. As Brent commented, I've lived and worked in South America for about 30 years, but done a bunch of other things around the world as well. I'm the founder of 2 junior exploration companies. The one that Brent mentioned, Reservoir Minerals. We made a copper-gold discovery in Serbia and were bought out for about $500 million in 2016. And Lara Exploration, the one I still have, working primarily in Brazil and Peru, looking for copper and gold. And it's a prospect generator. Actually, both of them were, which is a way of taking some of the risk out of these things. I think a lot of the disappointments that people find investing in these small companies is that they don't really have a business plan. They're not really very sustainable businesses, whereas the prospect generators bring a little financial discipline and sustainability to this sector.
You might as well explain exactly what a prospect generator business model is. There's a number of different ways companies go about looking for mineral deposits. None of it brings in revenue. It's all outgo. So the key is to keep a company's dilution to a minimum so that when that discovery happens, the shareholders benefit the most. So what is this prospect generator model?
I think, to make a sort of a comparison that you might understand a bit better, we're like if you go to, say, the biotech sector, we're like the scientists in the lab. So we are creative, we're doing something new and innovative, but you really have to go to a Pfizer or a Merck to take your product through FDA approvals, industrialization, marketing, and turn it into a billion-dollar brand. So we perform the same function for mining companies. So we go out into these frontier areas, be it Mexico or Brazil where I am, or the Yukon where Brandon is. We'll do the early stage work, reach out to the communities, stake claims, define targets, work them up, and then we'll joint venture the projects, as we bring them up to a certain point, we'll partner them or joint venture them with a mining company or an investor. So it delivers them a product they need, and it reduces the risk for our shareholders and allows us to do multiple projects, therefore greatly enhancing our chances of success.
Good, thank you. Going on to you, Brandon. You just got back from China. You've got an actual zinc resource. Does my thesis ring true? What are you seeing out there in the real world talking to Chinese investors, mining companies, that sort of thing?
Yeah, I guess from, we talk to everyone from sort of smelters down to the miners, and that's down to mid-tiers and majors. And I think they all see the same thing. They certainly, the short-term thing we're seeing now, which is very much a supply crunch for zinc right now, but they see sort of a long-term fundamental disconnect between what demand is expected to be and what exploration is producing in terms of new deposits. So they're all hungry, they see the writing on the wall, and normally the Chinese in particular want something that's pretty imminent, permitted, ready to go, or perhaps already in production. But what you're seeing is them move down the chain and move earlier because they're recognizing that that there's too much hunger for these assets now. You can no longer wait till it's just packaged up for you. You have to start taking that exploration and development risk.
What are you seeing, Paddy?
For us, from the last cycle, and this is sort of it's something you always see at every downturn, is that the big mining companies, when times get tough, the first things that they do are to let go of the generative exploration teams. And so during those times, what we were doing is we were putting together portfolios of packages. And so when times like this start to come around again and the mining companies start to pop their heads up and look for more projects, they don't have a team to do it. And so the interest level in what we're doing is particularly high, not only in packaged projects and things that we can offer to them, but also in terms of actually doing the work. They simply don't have the people to do the work, and that's where sort of the nimbleness and the ability of a prospect generator really comes into play. And so it's for us, it's the past sort of 16, 18 months has been a really good time, and we went from having a fairly good sized portfolio of projects available for option. Now we've got a couple projects left.
Talk about expenditures, like how much do you spend versus what your partners are spending? How's that going?
It's going well. Historically, I think for the past 7 years, we've invested about $4.5 million into our projects. Our partners have funded about $22 million. So that's a pretty good ratio of what we see.
All right, so most folks here look at microcaps in terms of revenue, cash flow, earnings growth as a way of valuing the microcaps. We can't do that, not yet. How should someone, I'm going to throw this at you, Miles, how would you suggest someone look at your company or any junior mining company to try and get some sort of idea of what's a reasonable valuation?
I mean, it's always a difficult question, but you have to look at what the company is trying to achieve. So, for instance, with Brandon's company, you have a zinc deposit. Large companies need those, they will buy them. So I've worked mostly with copper and gold. Our last copper gold discovery was bought out for $500 million. That's not a bad number for a quality deposit to be bought out for. So you have to look at what the company's looking for. Do they actually have any indication of finding it, or are they just talking about stuff? When I personally am investing in these things, I always try and see who owns the stock. So if the person selling me the idea, does he actually have any money at risk? I mean, for me, that's a big differentiator. And you also look at the balance sheet. I mean, I think a lot of these companies are not very well structured. I mean, you have to look at how you're going to make money, which would be appreciation of the shares. So you have to look at the number of shares outstanding, who owns them, and what backs up that share, that share issue, whether there's something of substance within the business.
Do you have any more to add to that, Brandon?
Yeah, I get, you know, it's for junior miners, I guess you're starting by looking at the closest comparable asset in production and what that's valued at. Then you have to kind of work through the time frame, so the discount due to time and the probability of getting to that stage. You know, for our asset, you might look at a comparable transaction and say, okay, how does this asset differ for that one? What does it take for us to get there? Obviously, we're starting economic studies, but those economic studies have to be successful. We have to be able to get our permit. It's going to take at least 5 years for us to get to production. So you can't just look at a transaction for a mine that was sold last year and say, oh, that's exactly analogous, that's what Fireweed Zinc is worth. It doesn't work that way. So we know the tricky thing for investors is to look at, like, okay, what steps have to be hit to get there? How do I and other market analysts feel about the odds of hitting those milestones? And what does that mean for, what value do I lose for each milestone I'm back from where I need to be to generating cash flow? So it requires quite a bit of rigor, and probably the shortcut to that is to do peer analysis. You know, you can do, and this is very crude, you can look at what's the enterprise value per pound of zinc equivalent, or per ounce on the ground, or per whatever, and then some adjustment factors for the maturity, grade, jurisdiction, what have you, for each of those peer group companies. It's non-trivial, but that's, I think, why you look to people like Brent and other analysts who can give you guidance on how to do it, and then you can start working out yourself.
Let's continue. Let's take your company. What's your market cap? Where do you think you can go? And what catalyst, what event the folks here need to see to know that you're on the right track?
So our market cap's about 50 million Canadian right now. So I guess to jump from that right to the end game, the transaction I talked about last year, the Sasa mine in Macedonia sold to Central Asia Metals for 400 million US. That's pretty much ready to produce. It is about 1/3 the size of what we're working with. So if you say that, let's hypothetically, just for simple math, say that, okay, so if our project with Mill Pass was in production, it would be worth 3 times that much, so $1.2 billion. Like I said, it takes at least probably 5 years for us to get to production. We're going to have to dilute our shares to get there. There's milestones and risks along the way. But then you take a look at, okay, so does that make 50 million right now fair? I don't think it is. I think it's an undervaluation. We have an economic study due out next month that will start to wrap some numbers around it, and that gives more clarity to investors. I think prior to economic studies, it's really only the savviest of analysts that can really suss out whether a project's viable or not. Because to the average retail guy, it's hard to know the vagaries of mining methods versus this and what have you. But certainly, for us, we look at peer analysis a lot. I talk a lot about that in terms of my presentation. You'll see it later. I talk about that very crude analysis I talked about. EV per pound of zinc equivalent on the ground. How are we versus our peers? Not all of those peers are the same of us. They don't all have the same size. They don't all have the same grade. But some of them are more mature. Some of them are closer to production, right? So which are the closest peers? Which one should you be relying on? And that's kind of what we encourage people to do, and what we would hope people would do with our company.
Great. So what we're looking for next is your economic study to see that your, call it 500 million valuation is potential, might be there.
Yeah.
Something like that. Okay.
Yeah.
That's the milestone we need to see next. That it's not a bust.
Right. Exactly. Yeah.
Okay. Paddy, same to you. How should someone value your company?
Well,
And I'm not just saying your company, but as there's lots of junior miners out there, but I want to get a good example of how people can evaluate the whole sector.
yeah, I think one of the things that Miles touched on earlier is looking at the team, the people who are obviously involved behind it, their history and their track record of success, skin in the game. And also then to look at the projects and again, looking at analogs that are out there. In our case, with Quale, it's a high sulfidation target. There's not a lot of them out there, and you have to look at historical incidents where they were taken out and specifically with us, there's 3 mines that currently exist in Mexico that I think are good examples of where we can get to with it. Obviously, there's a time discount, as Brandon mentioned, to these things, and so you have to take those into account. You can also follow a bit of the, the exploration, discovery, development type curve, and you can look at that and sort of project where we're on that track as well. And then you've got sort of outside of Mexico, you can look at other larger examples of like deposits like Carina, and I'm not saying that we're getting taken out for $1 billion tomorrow or anything like that, but certainly there's examples where you can see these projects and where they can get to. And again, it's early stages for where we're at, and that's what you'd have to look at, whether it's us or any other company, to see where these things can grow to.
I think it's a good point. I think it's really important when you're going into these early stage exploration projects that certainly the company has some sense of what it is they're looking for. Not just, I'm looking for a big porphyry copper or a gold vein, but what does it really look like in terms of what are the economics behind if you're successful? What's the infrastructure like? Are you on a road or you're in the middle of Mongolia? That affects your capex. So when you talk to these companies, they should have some sense right off the bat that if there's what success looks like, what they need to find in terms of tons and grade, what the metallurgy's got to be, they should have those answers. And you'd be surprised how many don't. Maybe you wouldn't. I was. So jump back to you, Miles. What question should investors be asking you, and what are they not asking, they should be asking?
Yeah, I mean, I think some of the things we've just covered. When I look at these things, I mean, I think first and foremost, if you don't really understand the sector, you should seek impartial advice from a group like Exploration Insights that can do that work for you. But you still need to make a judgment decision. And I do think, like many businesses, small cap companies, it's about the people involved. So I think the primary question is, how are you qualified to do what we're paying you to do? So, you get people who have on paper a very good CV, but their experience is actually quite different to that which they're trying to do with your money right now. So a guy perhaps who has experience exploring in Nevada, going to Russia instead and working in Russia. So you're paying somebody to learn. So I think for me, I'm spending shareholders' money exploring for copper in northern Brazil. I've lived and worked in Brazil for 30 years. So I actually have real expertise in what I'm doing. And that doesn't necessarily guarantee my success, but it gives me an edge. And I think you have to ask people what their edge is. Why should they get your money as opposed to somebody else doing something similar? So that's one. And also I think there seems to be, I see within our profession and within the exploration business, there are some people that are repeatedly successful, and some people that seem to go through life without ever finding much of anything. So I think you also want to look at track record. And then the third thing that we touched on a little previously is, do they actually have any money at risk in this? So I think it's quite easy to create a business, raise some money, and then pay yourself a nice salary and have an expense account if it's not your money at risk. So I like investing in these small cap companies where the people running the company actually have some real money at risk as well. So those would be the 3 things for me.
Brandon, you got something to add to that?
Yeah, I was just, you're talking about, do they have the expertise, and there's 2 on opposite ends of the spectrum types of juniors that I think people should avoid, and one is where there doesn't seem to be any geologists in the company. They contract the geologists for the summer to do the work, but there's no one actually thinking about it, or there's no engineers in the company. It's a bunch of promoters, or they call themselves businessmen, they're accountants or something like that, who maybe don't have the fundamental technical expertise. There's no one really within the company who is staking their reputation on the geology or engineering reality of the project. And there's the opposite side where it's all geologists, and the obsession becomes with the rocks, and they build this wonderful deposit. They outline a wonderful deposit that has no hope of becoming a mine, because nobody ever took a step back and conceptualized, as you said, what the mine looks like. And you know, from your first soil sample, before you take your first soil sample, you can stand on your property, or better yet, before you stake the property, and conceive of what would a mine look like here? Would the community want it? Could you ever get it permitted? There's lots of properties in the world that people are pushing on with that to a person who understands these things can be a little bit mind-blowing that they're spending all this money because you can't conceive of how it would work, or at least that it's such a tremendous uphill struggle. So you want the discipline of the financial end, the guys who can conceive the end game, but then you also want the geologists who understand the rocks, and you need them to be a little bit antagonistic with each other. That dynamic within a company is critical. So look for companies that have a mix on the board, a mix of employees. I think that's pretty critical to make sure that you have that the broader, the breadth of ideas and thought processes within the company to make sure it succeeds.
Those are great points. I think what I want to do is open it up to questions from y'all. Anyone out there? We've got some very smart people up here. Yes, sir.
How have valuations changed for most?
How has the valuation of miners changed over the past year? It's been overall pretty dismal. I don't have any exact numbers. I don't know if you've got any exact numbers of and such, but it's, you look at the indexes, and it's been pretty much down, despite metal prices being stable or going up. So what's really happened is the flow of funds into this sector has just dried up and has gone into various ETFs, higher risk sectors like weed and blockchain and such, or just the S&P. The sector is struggling, which again, I think that chart I showed brings us to the why this is, I think, a good time to be looking at this. We're close to a bottom.
Brent.
Yeah.
I think actually the last 12 months have been better than that.
Okay.
So I think so commodity prices and mining companies declined in value from about 2011 through till 2016. And you look at the mining companies particularly, I mean, there was something like $85 billion written off from poorly priced acquisitions and a fair amount of reorganization to reduce debt levels. But over the last 12 months, most of the mining companies have actually gone up in value, and commodities are now also going up. And I saw a chart recently, just in the last few days, that actually commodities are the best performing sector so far this year. The commodity package, which covers a bunch of different things, is up over 20% this year versus 5 or 6% for the S&P 500.
Yeah, I'd like you just make a comment on that.
They're coming off a very low bottom. So, I mean, the sector has fallen like a stone since 2011. But it is, I mean, the thing to understand about commodities and the companies that produce commodities, they are cyclicals. So very, very different. I mean, you have income stocks, you have growth stocks, you have cyclicals. Mining and commodities is very cyclical. So we're down at valuations now equivalent to where we were at the dot-com boom in the late 90s. We then had a massive run up through till 2011, collapsed again, a horrible bear market the last sort of 5 or 6 years. But we're definitely on the uptrend. If you look at the charts, it's you can see quite clearly there was a bottom in 2016, and very, very cheap valuation still, but we're off the bottom.
I agree. So we bounced off the bottom and heading up, unless Trump does something. Huh? Long way to go. Or the question is, what will it take to get gold to 2,000? Yeah, I don't know. I mean, I'm actually really surprised how well gold has done, given how well the other sectors have gone, the stock market's gone, how with interest rates rising, gold has held $1,300 to $1,350 for quite a long time. So it's holding up better than anyone would have thought, I think. Yeah. What is your favorite commodity and why? Paddy. I know your answer, gold. Because he found some.
Yes.
Brandon.
Yeah, look, I mean, it would be obviously easy for me to say zinc. I'm a big fan of the zinc medium and short, medium, and long-term market. But if I were to pick something else, it'd be copper. If within the next 12 to 18 months I could sell Fireweed, which I think is a real possibility, I'd be looking pretty hard for a copper project to pick up.
Miles.
Yeah, again, talking a little bit my own book because it's what I've been most successful with, but I very much like the fundamentals of copper right now. I think copper is probably the most sensitive ingredient to economic growth, and I think while it's a bit weak, we are seeing good economic growth pretty much globally now, and that is consuming more and more metal, and you know the fundamentals of the production side are looking very weak. So I think the outlook is positive, and that's without even considering, you know, the jump in consumption on new technologies like solar and electric vehicles and what have you. So,
What was that? Yesterday you gave me some figures on electric vehicles and how much copper they're going to use.
yeah, electric car uses 4 times as much copper as a normal car. Solar energy uses about twice as much copper as the equivalent amount of kilowatts in another type of, you know, more traditional power. And there's a bunch of things like that. I mean, we are consuming more and more as we become more sophisticated technologically. And then, you know, just infrastructure. I mean, the amount of money, it's like 1.3 trillion the Chinese are investing in their One Belt, One Road program, which, you know, in context, the Marshall Plan after the Second World War to rebuild Europe, if you move that to today's money, was about $170 billion.
Wow. Yes, sir.
Do you think with the recent downturn,
So with the recent decline in the sector, do we think we'll see more or fewer mining companies come in to buy off what these guys find, basically?
but it seems like some of the majors really consolidated their positions in the downturn?
Miles?
Yes, I mean, you know, there has been a substantial consolidation, and I guess there's a trend still for those large companies to buy assets because it's very hard for them to generate internally anything that would be meaningful. But at the same time, we have a universe of companies from China, from Korea, from Russia, from all over the world that we wouldn't have seen active in the past. I mean, it's amazing to me also how many new companies. I mean, I think the next generation of mid-caps will get built through this cycle because there'll be money available to do it again.
I think so as well. I think what we're, you know, Rio Tinto or BHP, whoever, can buy a deposit to supplement their production, but it does nothing to that chart I showed you where we're not, on the whole, we're not finding enough. So my thesis is what I started with is that regardless of metal price, economic deposits are going to become more and more valuable as these guys get more and more desperate to replace what they're mining.
I think when you talk about the amount of bidders for a project, I mean, it depends on your project, right? If your project has a $4 billion capex, you've got, you know, a handful of bidders for it. If it's a $200 to $500 million capex, then you've got, it's not just the majors, it's countless mid-tiers and Chinese SOEs and what have you that are potentially bidding on this. So consolidation at the very top may not matter if your project is not a, you know, behemoth in terms of capex. Like if it's not so large that there's only a few that have the balance sheet to make it happen.
Any other questions? Yeah, Laura.
I was reading something in regard to tantalum and cobalt.
Tantalum and cobalt. They are, a lot of these metals go through brief periods of being like the flavor of the day, if you will. Certainly there is a demand for cobalt. and tantalum, but there's no real, to my knowledge, big deficit of those deposits. But again, everything we need more of, and we're not finding enough.
The cobalt, though, you need the stabilization in the electrical, in the icon lithium battery, or you're not going to have a battery.
Yeah, no, certainly an economic cobalt deposit would be worth a lot.
Yeah, I mean, I think the thing with cobalt is most of it's produced in the DRC, in the Congo. So there's a concern that there's a risk to supply rather than a shortage.
I think it's beyond that. Cobalt fundamentally is a byproduct. I think there's a lot of cobalt companies out there right now who fashion themselves. They want to produce a primary cobalt mine, except that's almost never existed. And perhaps with cobalt prices high enough, what used to be a cobalt byproduct copper mine becomes a cobalt mine with a copper byproduct. But by the time you get that high, is there some sort of substitution? So the effect you have with cobalt is that the copper and nickel mines that are producing cobalt are not going to crank up production to meet cobalt demand if there's not a favorable market for the copper and nickel they're producing. That is the real value driver for them. So you have this problem where the cobalt supply cannot respond as nimbly to demand as you see with metals, where most of the metal comes from primary mines. So I think that's kind of the unique thing about cobalt. But then the reverse is true, that in periods of lax cobalt demand, the copper and nickel miners were still pumping it out because they're not going to stop producing copper and nickel because there's not a great market for cobalt. So then cobalt hits the floor. So sort of if you think in long term, what's your thinking on cobalt? Then you got to think: is the secondary cobalt enough to meet demand? If not, then there has to be some way to find some way to meet it, right? And personally, if I was going to launch a cobalt company, it would really be looking for a nickel project with a great cobalt credit, or a copper project with a great cobalt credit. I think trying to find a primary cobalt mine is you become so fixated on what you're talking about. I'm determined to find a cobalt mine that maybe you're missing a better cobalt opportunity by looking for something else that has cobalt.
A good point. All right. Lastly, I'm getting the hook here. How about if you're presenting or talking here at the show, or how can people get a hold of you if they want more information, Miles?
Well, we have a website, LRA.V. It's pretty easy to find. I'm speaking in half an hour in the Sunset 2 room. Be giving a presentation, some of the things we've covered here, and also a little bit more specific to my company as well.
Brandon.
Yeah, you can find us on fireweedzinc.com. I'm presenting at 2:30? 2:30 Sunset 2 as well? Okay, 2:30 Sunset 2. I have a minder here to make sure I'm in the right place. Thank you.
Paddy.
EvrimResources.com is where you can find us. I've presented, I did it this morning, but we have a booth set up here, and there's also a few spots left for one-on-ones tomorrow. So if you want to come meet us, spend some time, go find some space, and we're happy to meet with you.
And I'm here the rest of the day. I don't have a booth. That's my website, explorationinsights.com. I'm happy to take questions, answer any information you've got. I'm leaving tomorrow, going to look at some projects in Mexico, but I appreciate you all sitting through this. I hope it was useful and you learned something from it. Thank you.